Some of them will try gold, some of them will try commodities. Gradually, people will discover Bitcoin, and they'll start to realize that the solution to the problem is Bitcoin, because it is high velocity money, which is not corruptible. But that won't happen quickly. That will happen in a slow boil over the course of 1, 2, 3 decades. And I would say that the de-dollarification, or the embracing of commodity money, it's an auspicious catalyst on the periphery. That now the unthinkable is now thinkable. It's now clear that we have certain factions with money that are trying to figure out what they do in a world without the Western banking system.
In a world where digital currencies are rapidly gaining traction, Michael Saylor, executive chairman and co-founder of MicroStrategy, firmly believes that Bitcoin is poised to eclipse gold as a leading asset. In a recent interview at the Bitcoin 2023 conference in Miami, Saylor shared his views on the future of Bitcoin, gold, and banking. Michael Saylor mentioned that Bitcoin is king. Saylor's high-profile endorsement of Bitcoin and his continuous advocacy for its adoption had a profound impact on cryptocurrency market. Saylor presents a highly bullish stance on Bitcoin, suggesting it will outperform gold, leading to a complete transition of gold investors to Bitcoin. He bases his argument on the digital nature of Bitcoin, viewing it as the digital synthetic successor to gold, with faster appreciation rates, lower costs of custody, and no counterparty risks. Gold will fail and be replaced by Bitcoin. Bank collapses are a political decision, said Michael Saylor. And Saylor claimed that Bitcoin has succeeded as an inflation hedge and store of value. Speaking with CNBC today, Saylor said, "I think Bitcoin has found the bottom. The leverage is out of it. We are on a bull run. Bitcoin is the one commodity the SEC won't regulate. I think the way is clear for Bitcoin to rally from here." Although the space is going through growing pains, Saylor says there are still plenty of bullish factors for Bitcoin. Before proceeding further in this video, make sure to hit the subscribe button below for more recent updates about crypto market.
Hence, maybe we'd like to have a commodity money and we start searching. The king commodity isn't gold, the king commodity is Bitcoin, but the conventional commodity is gold. So when you start thinking about trading $1 billion of gold for $1 billion of fertilizer, the question becomes, A, how do you settle the gold? It's obscenely expensive to move it back and forth. B, it's not fast. How do I move it back and forth 100 times a month? And then C, how do I avoid getting ripped off, because you'll probably have it rehypothecated and inflated? In the history of gold, right? The fiction of gold is it's sound money. It's never been sound money. The history of gold is I can show you an incident every decade for the last 4,000 years where some ruler cheated using gold, debased the gold, issued notes against the gold, issued IOUs on the gold, or defaulted on the gold. It didn't just happen under Nixon. It didn't just happen under Roosevelt. It's happened over and over again. And it will happen again because gold itself isn't suitable as a high-velocity money. It's failed as high-velocity money for 150 years. The right way to think of it is Bitcoin is about $500 billion of monetary value right now against $500 trillion of financial instruments that are somewhat liquid that have value. And so that makes it 10 basis points. And so what reasonably should happen is it will, on the edge, continue to encroach and creep up, and it'll go from being 1/10% to 0.5% to 1% to 2% to 4% to 6% to 8%. But when Bitcoin is 10 million a coin, right, it still might not be 10, 15%. It will be one of a number of assets, and it will gradually drain off monetary energy, but there will be other assets. All assets are in competition with each other. It's not just currencies. Bitcoin is in competition with gold. Bitcoin is in competition with your second Airbnb apartment that you buy in order to generate rents off it. It's in competition with commercial real estate, in competition with ETFs, bond funds, not just sovereign bonds. It's in competition with corporate debt and mortgage-backed securities and the like. And all of these assets are in competition as a store of value. And then you have all these currencies in competition with each other, the US dollar and the CNY. And and every other currency. As long as nation states exist, they'll have currency. And the assets will continue to compete. And then if you happen to be in that situation where you live in a country where you don't have a reliable currency, if I lived in a war zone and the currency collapsed and I don't have an American bank in the war zone and the local bank is not trustworthy, at that point I'll adopt Bitcoin as my bank and I'll adopt Bitcoin as my currency, but that's because law and order broke down in that war zone for me. As long as I live in China, I'll use a Chinese bank and the Chinese currency. And when I live in the U.S., I'll use the U.S. banks and the U.S. currency. But you will see examples. You're seeing it right now. In Lebanon, they've abandoned the local currency and they're dollarizing because the banks failed, the currency failed. And people from Lebanon will tell you that dollar is the currency. And in El Salvador, after their civil war, their currency failed, so they adopted the dollar. If people are able to adopt the dollar, they may, but you can see right now with the clamp down on stable coins, they may have a hard time adopting the dollar. So the one thing that everybody can adopt is Bitcoin.
Michael Saylor says all big banks will one day custody Bitcoin. Large institutions, churches, corporations, and the like are going to need an infrastructure of custodians and banks, and so I do think there will be a time when all the big banks will custody Bitcoin. He roped in bank failures, hyperinflation, regulators calling the asset a commodity, and whenever a company like MicroStrategy buys another $100 million worth of Bitcoin as similar catalysts for adoption. Michael Saylor, central bank digital currencies will be a government marketing event that unintendedly fuels Bitcoin fever. Saylor says concerns about the potential pitfalls of a digital dollar, including mass surveillance of how people spend their money, will drive an intense level of interest in the world's largest decentralized crypto asset, Bitcoin. Saylor said the meltdown of FTX was a catalytic event that caused the regulators to decide that crypto exchanges, crypto securities, and cryptocurrencies that imitate the dollar are not really consistent with a stable world financial system. He points out that politicians can choose to support failing banks or allow them to collapse, thereby affecting creditors and equity holders. He cites the recent failures of Silvergate, Silicon Valley Bank, Signature, and First Republic Bank as examples, noting that the federal government and Federal Reserve bailed out depositors while the banks were allowed to fail. I think the crypto tokens and crypto securities are going to be regulated, perhaps out of existence, he told CNBC on Friday, adding that the token is the one commodity that the SEC is not going to regulate. Bitcoin is the most secure network. It's the most secure asset. Everything else has got a black cloud hanging over it. Saylor ended with a cautionary note on banking, advising against keeping money in weak banks or banks located in countries with weak currencies.
I think that that Bitcoin will first find its way into the sovereign wealth funds because they know how to invest in Apple. And if you're going to hold Apple, if you're going to hold the world's strongest mobile network, why wouldn't you hold the world's strongest digital monetary network? So I think you'll see it creep in that way. They're the most innovative, most risk-taking. I think the extremely bureaucratic, stable, traditional central banks of the mega states, they'll be the last to embrace it. So I wouldn't look to them to do it until you first see it in the sovereign wealth funds, and then you see it in places like El Salvador. You see it in the smaller countries that have more to gain, less to lose. And before that happens, though, I think you'll see institutional investors and you'll see families and private companies and then public companies embrace Bitcoin. I think ultimately the banking establishment won't want it either, because the CBDC would be an example of disintermediating all the banks, starting with the big banks down to all the banks, and then what is their business. So I think that that there will be alarmists that will say, oh, the CBDC's coming, get ready. I think that will sell a lot of Bitcoin. I think a lot of people will go and they will buy Bitcoin and you'll get a lot of campaign donations, right? But I think ultimately the political settlement will be digital currency will come not in the form of a stable coin. I think that they will eventually wind down because that's too much freedom. And the regulators are winding them down, like the Wells notice to BUSD, like the custodia denial letter, like the move by the Canadian regulators to prevent you from trading stablecoins on crypto exchanges in Canada, like the denial of Tether in the US. So I think the regulators will move to clamp down on any non-KYC digital dollars. I think that no one is putting forth any CBDC legislation right now that I can see. There's no credibility there, a consensus. I think we're probably headed toward less digital currency. Like right now there's $140 billion. At the peak, there were probably $160 billion of digital currency trading between Tether and Circle and other coins and UST. And I think we've already peaked, and I think we're going toward less of that. And then at some point, they will restart the digital currency initiative, and it will be an FDIC-insured bank approved by the Federal Reserve and the Treasury that they trust. And there will be a negotiated set of controls, like more than $10,000 will be reported and less than $10,000 will not be reported, and the records will be held by the bank and not by the U.S. government. And the libertarians won't like it, right? It won't make them happy. It's too much control. But at the end of the day, the authoritarians won't like it because it'll be too little control. But the United States has already shown that it's willing to actually use banks and bank wires to move money around and let JP Morgan and Goldman Sachs and Citigroup do whatever they're going to do.
Meanwhile, Coin Price Forecast, a widely used price prediction tool, was quite bullish on Bitcoin's price in the coming years. The forecast website predicts Bitcoin to hit $35,085 by the end of 2023, implying a potential upside of more than 30%. Notably, this is over $2,000 more than the price prediction retrieved back in February. Is the lack of clarity in crypto regulation in the United States intentional, as Saylor suggests? Isn't it time for this consideration to change? Do you agree with Michael Saylor's perspective about Bitcoin performance? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.